All right. Welcome, everybody. Happy Wednesday. Thank you guys for joining us. I'm super excited about everything that we have in store for everybody. I'll start off just in case we have not met before. My name is Melissa Langdale, and I'm the founder and CEO of Praxis Lending Solutions. Praxis is a premier executive mortgage consulting firm. We're on a mission to leverage technology and intentional workflow design to help lower the cost of origination for lenders, but also to be able to help build in elasticity into their business models to better respond to those kind of market-induced volume fluctuations. So we kind of serve two purposes. We're going to try to, lower the cost of origination, but then also help lenders to build a better foundation to leverage technology to be able to eliminate some of the challenges with having to hire more people as volume picks up in our industry. So super excited to have you guys join us today. We are actually going to talk about high tech and high touch solutions that can improve customer experience, but also sales conversion. And I've got a couple of key people that are going to help me in that conversation. Before we get going and introducing all of them, I want to ask James Duncan to jump up on screen with us and tell everybody hi. James is the founder of Kylum Advisors. He is also a marketing genius and our production partner for this event. In case you have not heard of Kylum before, they provide strategy-first support for lenders who expect more from their marketings. And it's actually backed by real mortgage industry experience. So while most agencies, bring in marketing expertise with kind of limited industry knowledge, Kylum is very different because of James's background. And so excited to have James joining us as our production partner and Kylum joining us as well. So thanks, James, for being here.
My pleasure. I appreciate the quick plug and look forward to getting to meet more people and level up everybody's marketing expertise in this industry.
I love it. All right. Well, I am also going to introduce my co-host today. I have two incredible professionals that are joining me, which I know most of you probably already know, but I'm going to make some introductions just in case. We have Dave Savage here with us, who is the Chief Growth Officer at Trust Engine, which is actually the industry's first borrower intelligence platform. We also have Michael Jones joining us, who is the Director of Mortgage at University Federal Credit Union. Michael and Dave, thank you so much for being here today.
It's good to be here. Excited.
I am too. We have lots of good things in store for everybody that is here today. But before we get going, I want to make sure everybody sees us and hears us and all the things, and you feel comfortable with using the chat. And I'm normally start out with some trivia questions, but today I'm going to ask a little bit of a deeper question. And I want to hear both from Michael and Dave, but I would love to hear from our audience as well. It's one of my most favorite questions to ask people. And it is, if you had unlimited resources, you don't have any restraints on technology, you don't have any restraints on budget. So you're living in this world of kind of unicorns and rainbows where everything is possible, but you could only fix one thing in the mortgage space. Where would you start? What would you want to fix? If you had unlimited technology resources and unlimited budget. Dave, I think I'll start with you on this one, considering you live in the technology space every day. What would you start with?
Well, I mean, it's super easy. I mean, there's not even a close second place, and that is loan officer adoption. I would execute on everything that you can do, both in product design and in service and staffing, and have loan officers adopt the technology that lenders spend millions of dollars on that could make them millions of dollars. Like, if we could solve that problem in every market, regardless of what interest rates are at, every lender would be very profitable if we could just get the LOs to adopt the software that we spend a lot of money on.
I love it. Michael, how about you?
Yeah, I would second that, Dave. But I think the thing I would solve for is that would improve the customer experience is having a fin locker type solution really be not only an industry norm, but sort of a financial norm, because a lot of what we spend time in shepherding the loan through the manufacturing process is hunting down pay stubs and verifying income and this and that. And if we had a repository that we could access, that everybody is feeding into all the time, it would make the process a lot simpler. And I know that's a very fragmented part of the industry because there's so many players and there's some solutions. But I've always loved what FinLocker has done. And I think just that being more of a industry standard that would help not only the mortgage industry, but, you know, many other facets of lending and financial advising and that kind of thing.
Yeah.
Well, I know someone who loves that suggestion. How about that, Brian? FinLocker, next level.
That's right.
I love it. Actually, it's very similar to my wish. And I've had this wish for years, and I've not seen it like fully executed on the way that is in my head right now. And it really is a borrower-facing application process that really has the ability to go down two different paths, right? It's kind of bifurcated in nature, and it says basically, you know, the funnel is, do I know you or don't I know you, right? If I know all of your data, if I have worked with you in the past, or I have a FinLocker type partner that has that kind of data already or documents already for the customer, we should be pre-filling the application with all of that information. And then all they have to do is just agree that those things have not changed since that data was, pulled. And so I would love to see that, and just, again, to improve the customer experience, like you said, Michael. So you and I are very much on the same page. I love it.
But I will make a note, if the loan officers don't use it the way they're supposed to use it, you could have that, and it wouldn't deliver nearly the value if we didn't solve the LO adoption problem.
Totally agree. We got some good suggestions in the chat too. Turnaround times, absolutely, Reza. Want to see credit to be live action integrated into the LOS and be able to work trade lines individually. This should generate a score live, not once a month. Okay, I like that suggestion as well, Alexander. Very cool. So thank you, guys. I'm going to go ahead and just kind of give everybody a little bit of an overview, not only of what we're going to talk about today, but of this series in general. A lot of what I spend time talking with lenders about is how to intentionally design their companies to be able to tackle what's coming, right? Kind of designing their companies to be future-proof. And so that's how this series came into existence. And for those of you that weren't able to join us last week, we talked about the future of mortgage manufacturing last week with Gemma Paciano at Legend Lending. So I see her on today. Thanks, Gemma, for joining us. We had a great conversation around that. James is actually going to put the link, if you weren't able to join us last week, he'll put the link in the chat for you so that you can kind of catch up and see that week as well. Today, we're going to talk about high-tech and high-touch solutions. Next week, we're going to tackle all things AI. We're going to talk about risk, reward, how to actually get an ROI on some of these solutions, because I know that has been a huge challenge for our industry. Shashank Shaker and Mark Cunningham are going to join us next week. The week after, we're going to talk about the future of mortgage regulation. And that week, I'm going to be joined by Greg Scheer and Taylor Stork. I'm sure is going to be a great conversation with them. Then the fifth week, we're going to talk about maximizing tech adoption with Randall Gillespie and Brian View. And then we're going to finish this series with preparing your companies for the next generation of homebuyer, but also the next generation of mortgage professionals. So Jake Vermillion and Kristen Messerly are going to join us for that conversation as well. So lots of great things in store. Like I said, this week, we're going to talk a lot about high tech and high touch solutions. So let's go ahead and get started. Dave, Michael, you ready?
Let's go. And by the way, make sure you mark your calendars for that. I mean, the quality of leaders that you have and the topics are amazing. I will definitely be putting that on my schedule.
Thank you. Thank you. Yeah, I'm very excited. We had a great kickoff this first week, and we have a lot of people joining us this week to listen in as well. So very excited about all the opportunity that our industry could have as a result of talking about these things together. All right, so I'm going to go ahead and get us kicked off. Last week, we talked a little bit about customer expectations, but I'd love both of your takes on this because I think you both come from very unique perspectives. What do consumers, what do referral partners, what do our teams really expect from a technology perspective for leaders and lenders that are on this call? What are they really expecting from us to be able to provide for them? Let's start with Dave on this one, and then we'll move over to Mike.
Yeah, I'm gonna pull from an interview I did with Bruce Gerke, who is head of lending intelligence for JD Power, and I actually interviewed him just a couple weeks ago. But he said a lot of things, some of them validated things that I already knew and believed, and then he said some new things. And so, I mean, one thing that he said that I think we really need to take note of in the mortgage industry is that when we create technology that's borrower facing, we're not competing with other lending technologies, other point of sales. I mean, we're competing with Amazon, we're competing with Uber, we're competing with Instagram, and the technology standards and what people expect. And obviously it's mobile first, but it's mobile amazing, and we're competing with Redfin. So I thought that was important. And I think a lot of people are listening and going, yeah, we know that, but are we executing at that standard? And then, another thing that he said is that the consumer's expectation is beyond just the point in which they apply. Like, they want us to anticipate their needs and to provide value before the transaction, even before they think they have a need, like before the thought. One of the things that we talk a lot about at Trust Engine and Mortgage Coach is speed to need. Being able to use data to identify the needs of a consumer, anticipate the needs of the consumer, and then deliver them the value. And then the third thing is showing. This came from Bruce again. Showing is better than telling. We need to do a better job of visually showing people how to save money, visually showing people every step of the process. So those are three things. They're all mentioned in that interview. I'll put a link to that in chat. And those are my thoughts.
Love it. Michael, how about you?
Yeah, I think, there's a couple of things at play. Amazon, you mentioned, Dave. I think Amazon has absolutely changed the way people shop, whether that's for a pair of shoes or that's for a mortgage, because they expect to be able to get information very easily. They expect to be able to do, one click checkout. Our friends over at Rocket years ago made the phrase, click button, get mortgage. And so you have this sort of thought in the mind of the consumer that this is supposed to be very easy, and everything else they do in life is very easy, from like a shopping transaction standpoint. Filling out your taxes, if you're using TurboTax, is very quick and intuitive. And so I think as lenders, we need to make sure that our process does that. I think most of the points of sale out there do that, but the consumer, I think, wants to know, how long is this going to take me? And so making sure that there's information of like, okay, this is only going to take 5 or 10 minutes. There's light at the end of the tunnel as they start providing all of their life information. I think both for the consumer as well as for the referral partner, there's an expectation of transparency as to where am I at in the process? Are we on track? How easily can I access that information? I would say that's maybe about as 50% as good as it could be nowadays. There's some technology solutions that do a really good job of doing that. And I think there's some lenders that really don't embrace how important that is, because there's nothing more wasteful on anybody's day for somebody to have to shoot an email, text, or phone call. Where are we at? Are we on track? What stage are we in? Has it been submitted to underwriting? Having that information available to everybody in real time, I think, is really critical. And I think speed to close is important, but I think more speed to certainty is a lot more important, because when a consumer or referral partner knows, okay, this thing's in the bag, now we're waiting for a closing day. That's much different than, well, I don't have an answer yet, and we're chewing through the contract timeframe. So I think that's the most important thing versus like speed to close, is that speed to certainty.
I love that. That speed to certainty phrase. I think we need to adopt that as an industry. That's such an important component for customers, I know. And I love both of you talked about the Amazon experience. I see customers wanting that Amazon experience, but with human in the loop, right? Like I need an out. If I'm going through this process and there's something I don't understand, or I need somebody to explain to me why this option is better than that option, I need to be able to have somebody instantly available to walk me through this. And a real person that I can trust and that I know is there to and is knowledgeable enough to be able to answer all of my questions. And so I think in my mind, it's that kind of Amazon experience with the human in the loop at the right moments in time.
Could I add something on top
please.
of that? I want everyone, like, if you have a pen and paper, write down WACD, and you can put that in chat later on and say, hey, what does WACD mean in the context of the retail industry? But the retailers who have executed on WACD, their stock is up and they're still in business. And the realtors who have not executed on WACD are either already out of business or their stock is down, and it stands for what Amazon can't do. And so that advice applies to the mortgage industry. Even though Amazon is not yet in the mortgage and housing industry, the players that are, they're building, home ownership platforms. And so you need to execute on what Amazon cannot do if you're local, which I know a lot of you are local. And then you also need to execute on what Amazon can do. So, I mean, that is really the duality. And like, if anybody on this call has ever shopped at a Nordstrom's, they do what Amazon can't do. You go into that store, you've got a great selection of super high quality things with super high quality people. And if they don't have what you want in stock, you talk to anybody, they go to a terminal and go, oh, you know what? You can get that at our store 8.7 miles this way, a store 30 miles this way, or I can click a button and have it sent to your house. And if you don't like it, you can bring it back. So a great example of that. And I think for most lenders, that's the North Star going forward.
I love it. What can't Amazon do? That actually is a really good kind of segue into what I think a lot of people on this call are probably thinking with the news of Rocket and Redfin and Mr. Cooper all being very kind of recent. The biggest question I have folks come to me with is, how do I compete? How do I keep my customer for life? So obviously with Rocket owning more and more of kind of the sales cycle and all the data that comes along with that, most people are just concerned about how do I keep those customers long term, and be available at that kind of point of thought, to each of your points earlier, that kind of point of thought moment instead of the point of sale moment. So how do you both see this impacting the local LO? And what kind of suggestions do you have for mortgage executives that are on this call to kind of best position their companies to be at that point of thought? Michael, let's start with you on this one, and then we'll jump over to Dave.
I may say a few things here that aren't super popular among the mortgage industry, but I've said this before. So I think what has happened, both as a function of COVID with low rates and just the sheer number of transactions that everybody was going through, as well as the acceleration of technology in the industry, for the vast majority of borrowers, the mortgages become commoditized, and it's become commoditized because our points of sale have gotten so good. Day one certainty has created streamlining of, getting certain documentation. And so, I think, yes, there is definitely a need for an advisor to be there, but because mortgage has turned into a bit of commodity, because it can be done so fast, it can be done relatively easily, because there's so many different players out there and there's so many different pieces of technology to help, that I think you've got to recognize that if you don't make it easy, if you have things that are in your process that cause there to be a glitch or a delay, or for there to be less than, kind of perfect customer satisfaction, people are going to go. And so I think you've really got to be obsessed with making sure that that is very easy for the consumers. Again, you're keeping your referral partners in the loop. And then also, like, price matters. Price matters a lot because of the commoditization of mortgage. It is so easy to shop rates, and it's so easy to say, well, if you're both going to close at the same time, and if the terms of the loan are the exact same, it's a 30-year fixed rate mortgage, then I'm going to go with the lowest option. And so you've really got to make sure that you've stripped excess out of the chain. I think most mortgage companies have done that at this phase of the cycle where their headcount is more in line. And also they've got only the absolute technology they need. They don't have a lot of excess and nice to have. So I say all that to say, like, you've got to make sure that your price is sharp, whether you're a local loan officer or whether you're, a call center, because that's going to be one of the very first things people look at. If you're in the market, then, they'll start leaning on the advice, then they'll start leaning on reputation. And like I said, I know there's a lot of people that would disagree with that, but people are losing deals over $100 in closing fees. They're losing deals over 1/8 of rate. And that's not new, but I think it's getting harder and harder to justify, why you're more expensive than somebody down the street. So Dave, I'll kick it over to you for your thoughts.
I love it.
All right. So, go ahead, Melissa.
I was just going to say, one of my most favorite questions, to Michael's point, one of my most favorite questions that one of my loan officers used to ask people when they would call and ask, like, what's your 30-year fixed rate? He would always go, well, what rate do you need? Because I have all of them, right? And so it's that kind of pivotal moment that I think you were talking about, where we transition from kind of, that lowest, that commodity, as you mentioned, to that advisor. So I'm sure, Dave, you've got a lot more insights on this. What do you think? How do we best position loan officers to be at the point of thought instead of the point of sale? And then how do executives help support that?
Well, first, be super clear that what the biggest players that are coming into our space are doing. I hear the tip to tail to tip here, from first click to final payment, which is my favorite one, because that's what people want. Is they want homeownership with financial freedom. So from click to final payment. But first, I think we're at an industry that's at point of shop. We need, and a lot of people are talking about being point of thought, but to me, it's about being point of need and being able to anticipate the needs. And when you look at the quote from the CEO of Rocket when they announced the acquisition of Redfin, he told you where they're going. There's a quote that talks about, we're going to anticipate the needs. Yeah. And then I do want to remind folks that do lead local mortgage professionals that I don't think Rocket and that's not going to be the biggest news of the year. I think there will be other big stories of big mergers and consolidation taking place, but it's the local loan officers that are quick to adapt and turn their loan officers into data-driven local mortgage advisors. Like that's the biggest threat. So I think there's a couple things, we need to do. We need to win your database. If you win your database and you get your loan officers to actually win their database, you're going to be rocket proofing, future proofing your loan officers. And then they need to also win their zip code or win their city or win whatever. It could be a niche, an online niche. Like we specialize in military, but you got to win a niche. And again, if you're local, I highly recommend one of those niches is your proximity, because that is something that Rocket and big national platforms cannot own, is own those things. So just, monitoring your database beyond what's common. Like if you're monitoring for credit alerts, someone didn't acquire, that's good, but you need to anticipate the needs of who's most likely to move up. Right now we're seeing a lot of first-time sellers are the hot spot, because anybody that bought a home in the last 3 to 5 years, 3 to 7 years, they've got a lot of equity and they got a great ROI. If they put 5 or 10% down, they have really multiplied that money. And then it's anticipate the needs, and then it help the consumer. I think you said speed to confidence. Like the company and the mortgage professional that can could go from I'm confused or should I move up now? And you could get them financially fired up. Like, wow, I'm clear. I'm financially fired up. That's who's going to win. And there are, I mean, the people that I interview on our YouTube channel, they are really good at getting consumers who are on the fence. Oh, I'm going to wait till rates come down. Oh, prices are too high. They're really good at connecting with that human being, high touch, listening skills, asking great questions, high emotional IQ. And then they're really good at using technology to get that consumer clear and financially fired up.
I think for me, there's a couple of things that come out of that. I love the continued focus on speed to certainty. Maybe we also add a what can't Rocket do or into the what can't Amazon do phrase, so that we've got both in there. But I also think there's a critical component of what Rocket has here that's not just how they service customers long term. It's also how they get to that point of thought that I think is the piece that everybody's really trying to figure out. Because if they have data, right? If you think about their Rocket Money kind of application, right? They're able with that data to actually kind of monitor how customers are spending their money and what's important to them. And they can be at the point where they can make a suggestion, right? They can say, hey, based on your spending habits or based on your savings habits, have you thought about investing in a new home, right? Or have you thought about taking this next step to home ownership? And they're at that critical point. So that captures kind of the first time home buyer, but it also could capture the refinancers, right? That as they're monitoring how they're spending money, they could say, hey, you could save X amount on your mortgage if you consider to refinance. So when they're in this application and they're interacting on a regular basis with Rocket Money, and loan officers, what I used to do as a loan officer is I used to have like an annual review that I did with my customers, right? We would touch base kind of once a quarter, and then every year I would do this big review with them and say, hey, is it time to look at, how things with your family? Is it time to look at refinancing, or are you considering a next move? But that process won't necessarily work anymore if the data that Rocket is using can anticipate that need ahead of time. And so I think that's what a lot of people are trying to kind of wrap their head around now is how do I take the activities that I used to do as a loan officer to try to be present and part of somebody's kind of journey, whether, the homeownership journey in whatever way, shape, and form that is, into being the prompter for the opportunity. So it'll be interesting as this continues to evolve. Maybe tools will come out that can help loan officers to be able to better navigate that, or maybe y'all have already seen them and I just haven't. So let me know if that's the case.
Well, by the way, there are a tremendous amount of tools that, speak to what you're saying. And that would be my big message to the industry. And I opened around loan officer adoption, but if you could just get your loan officers to execute on the tech stacks that many of you already have, Mortgage Coach is just an example of that, where the loan officers that are delivering that experience, they're closing 10% more of their credit reports are turning into loans, and they're at least 10 basis points more profitable. And that's just one touch point. That's just the where price is delivered if they do price with advice. And so I do think we need more tech, and we need more comprehensive platforms, and we need better integrations among all these. But getting your loan officers to actually adopt, I would put it the highest priority, which I have some suggestions on, but we'll get to that later.
Yeah. Well, and I'd love to hear about that. So we've talked a lot so far today about where we're at today. What are the things in front of us that are causing challenges? What are the technology and tools that are available for us to be able to maximize our opportunities? If we transition a little bit into the future of what's possible around really where AI is going and how companies are starting to kind of rethink how they're leveraging AI and technology, how they're kind of designing their workflow to be able to better input AI solutions into that over time and hopefully see a better ROI as a result. But as we think about what's possible with AI, particularly generative AI, right? Multilingual, real support, all hours of the day and night when customers can have questions, that kind of real-time transparency and support you guys were talking about. There is a component, though, that I think we should be really clear on, the areas that we think AI should be involved in and the areas that we think we should always have people in. And so as you think about the future a little bit, Dave and Michael, I'd love to hear your thoughts on what are parts of the process that you really think humans are always going to have to be involved in, and what are the parts that you feel like we can really lean into leveraging AI better in the future? Maybe we start with Michael on this one.
Yeah. Well, and AI is making so much progress, kind of on a daily, weekly basis. It'll be very interesting to see where it ends up.
Yeah.
I think the role that AI can play may get a lot more dynamic depending on the future of Fannie and Freddie, because to a certain extent right now, with so much of the business going to those two agencies, you've got a pretty big cookie cutter, and it's just, same type of mortgage product. And I think where AI can play a lot bigger role is if we see private label securitization come back in a meaningful way, or with, say, our non-QM lenders, because right now there's not a whole lot of variation and decision making that has to go into a Fannie and Freddie loan, right? Like, you've got some variable income, which can be unique, but I mean, you're given your parameters as to what that should be. And so I think what the role of AI will do in the future, particularly for, say, private label securitization or the expansion of non-QM, is it will be able to look at trended credit report data. It will be able to look at, let me analyze your bank statement activity. Let me analyze some of these other things, your history on the job, and I can predict how long you're going to be in this house, whether or not you're going to make your payments, that sort of thing. And that's where I can see it playing a lot more of a dynamic role. I do think the more we can get away from a human being having to stare and compare and fact check the data that has come in, I think we can spend more time on making those loans to individuals that do require some decision making versus, yep, here's your W-2, and yep, it matches what you put on your IRLA, so here's your mortgage. Because that's just not, that's really just complying with what the cookie cutter wants, which is the Fannie Mae and Freddie Mac guides, as great as they are, right? But I think we are, for the first time in 15 years, looking at the possibility of a completely different mortgage environment. And so I see AI playing a lot bigger role, particularly in that decision-making process, than it ever has before.
I love it. Dave, how about you?
Well, the only thing I'm sure that AI won't be able to do is be a human being and have a personality and be able to personally connect with people in the real world. And the more I see new AI features and new applications, the more I'm realizing just how much they can do. I mean, there's no question there will be a time when you're talking to someone over the phone or on Zoom, and it will be indistinguishable as to whether or not you're talking to a bot or you're talking to a human being. Like, that will be an indistinguishable experience at some point. Of course, there will be disclosures, like, you're talking, like right now we're rolling out a feature within Mortgage Coach where a consumer, a borrower, can interact with the total cost analysis just like ChatGPT or any AI chat. And, hey, what's the best option if I'm going to live in the home for 5 years? And it will be able to, hey, what would be my equity be on option 2 in 5 years? And, at the speed of thought, they're getting their needs addressed. And the loan officer is seeing how that consumer is interacting. So, I mean, I think the thing the way I think and the way I advocate that we all need to think is realize that AI is the fastest, most widely adopted consumer technology that's ever, touched planet Earth. I mean, like, it's spreading fast. And I do think that right now we need to be thinking like consumers are using AI to shop for mortgages, to shop for homes. I mean, it is an augmented assistant. And so I just think the AI is not going to replace loan officers, which, by the way, it will replace some loan officers, and it already is replacing people. But mortgage professionals that use technology and use AI are, we're just seeing the gap widen. Like the 80-20 rule is like old school. I don't know exactly what the percentage is, but it's moving towards the 5-95 rule. Pareto's principle is changing right now.
I think AI for me, and we talked about this a little bit in last week's kind of future of manufacturing. And I break down what we do as an industry, like in a bunch of individual little tasks, and AI can tackle this specific task. So the role of the loan officer may be shifting and changing some. And so I love your point about the loan officers that are leveraging technology are the ones that are going to, continue to be successful and are really going to be able to take the leap forward in comparison to their competition. I think for me too, AI has the difference between what like a human can be involved in and what AI can really be involved in is humans are really good at anticipating need. To some degree, right? If you think about all the experience you have in the industry, you ask the right questions and you're kind of anticipating in those questions what the customer is really going to be coming back with. And you're positioning those in a way that kind of moves the conversation forward in a way that's really helpful for the customer. ChatGPT and the generative AI solutions that are out today, although it's not without some versions of this, but for the most part, they're response engines, right? And so the customers are asking a question and they're getting a very specific question to that, or very specific answer to that question versus what a salesperson would be able to do as an advisor, right? And kind of guiding that customer through. And so I think anytime you as a salesperson can lean into the areas that really separate you from being a response engine to being more of an advisor, I think you're really going to set you apart in the long run. The other big component, go ahead, Dave, I'm sorry.
Well, I was going to say one thing that came out of a roundtable I was a part of recently that, as you guys were sharing, it kind of jogged that memory was whether it's actually being done now or whether it's proposed. I thought a really interesting use for AI was almost like a loan officer companion that could be sitting on a phone call, for example. And so, let's say that they're on a landline. And so, they've kind of got the computer fed in there. But for an AI to be able to analyze, you're spending 30 minutes with this customer on the phone, and there's things that this borrower is saying, and the AI being able to connect dots that the loan officer who's, maybe trying to type while they're talking and maybe trying to run through scenarios in their head of like, okay, well, they just told me they have bonus income. So what's that going to mean? And, what's their loan program, that they miss details. And so for an AI to be able to sit there and either digest the call and give a summary or to be able to flash things at the LO in real time. For example, a green LO who, maybe got into the industry 3 or 4 months ago, and they're now working with their first self-employed borrower. They don't know the guidelines. They don't know what to ask, but for the AI to prompt them, hey, they said something about bonus income. We need to get an understanding of like how long they've earned that. Does it change month to month? That kind of thing. And so in real time, that loan officer can be more of that expert because they're being prompted by the AI who's sitting on top of the guidelines and also ingesting and analyzing this call in real time. So I think that could be a really unique use of it in the future.
I love that. And I think if I remember correctly, there was one interview I heard recently from Rocket's CEO, Varun Krishna. He said that's actually how they're using AI for a lot of their loan officers. So it's definitely an interesting thought to think about.
Yeah, he recently did a great interview with Greg Shear. Recommend people check that out on LinkedIn. A great 30-minute conversation, and they are doing that at scale.
Yeah, I thought I agree. I was on that call too. It was a great call. So one of the other components, if I think about kind of the future of mortgage technology and where we can really be leaning in to provide more of that kind of speed to certainty, as Michael said, we could really be leveraging kind of source data a lot, leveraging that a lot better than we are today for customers. So we're kind of capturing all that verification data up front, whether that be assets or income or employment or, whatever the case may be. But there have been some kind of trust barriers with customers going through that particular process because they got to enter in passwords, or they have questions around how long the lender is going to have that data, or, whatever the case may be. I'm curious if you guys have heard from loan officers or other mortgage executives on ways that they're getting past some of those kind of traditional barriers or traditional kind of kickbacks from customers. Dave, let's start with you on that. Are there things you're hearing from LOs or from executives on ways that they're overcoming those objections?
Well, I mean, first, let's acknowledge that I think, I can't remember the name of the survey. It will come to me at some point, but they survey the world. But in America right now, last year became the first year where distrust was the default in America. So forget about the mortgage experience. Distrust is the default in America. People come into that conversation skeptical and concerned. So, the things I see where loan officers win and when lenders win at scale, the more transparency you provide, the more trust that you have, the more that you are delivering value beyond the transaction. You're doing things for the consumer beyond the transaction, like in the point of sale, using our tool to like, hey, here's options. Here's the cost of those options, not over like 5 years, but over 30 years. That creates transparency. That creates value. Things, and I took this from Stratmore, the quality of the needs list, and to, give a comprehensive need list that's not using buzzwords. That's a high impact point of contact when you give a needs list. Another really trust building high point of contact is to call people, not because you're calling for conditions, but just calling to check in proactively. Like, let's just say 7 days in, having someone call up and say, hey, I'm checking in, seeing if you have any questions and making sure that you feel good about the process right now. You didn't call for the transactional need. You called for a high point, just to build trust, show care. It's things like that. By the way, at the point of sale. So at the point of need, what can you do? And then it's in the transaction, what can you do? But just acknowledge that it's not just the mortgage experience. Distrust is the default in the United States of America.
I love that. Michael, how about you?
Yeah, I think Dave is right that that trust is an issue largely because the scams have gotten so bad. Even in the pre-call here, we were talking about, an instance that involved me a few years ago that, somebody just, was like trying to act, as me. And so I think the consumer nowadays, up and down the age spectrum, is very skeptical, and unfortunately they need to be, because, we've got all of these issues that can arise, particularly towards closing with wiring funds, and then, just the entire process. One thing I hear fairly regularly from loan officers that I work with, in addition to ones that I speak with, is fatigue on the part of the consumer for all of these different systems that can be a part of the mortgage process. And if you think about it, that if you get them hooked into a CRM, they may have exposure to your CRM. That's one platform. Your point of sale system is another platform. If they have to do verification of assets, that could be another platform, whether it's Plaid or, any of those guys that act as intermediaries. As you're going to closing, sometimes your point of sale may or may not have, your closing documents. So they may be exposed to yet another technology. Some people allow exposure to the LOS. So that's a fifth technology. And then, as you go to closing, sometimes there's the title company has some technology. And then post-closing, not only do they have sometimes a survey, which is another technology, but they also have whoever it is that they're getting onboarded to as their servicing platform. And so, I think there's just this sense of, I really want to fill out your application one time, and I really don't want to have to get into all these other subsystems, because that's where the fear arises. I've built trust with you as the loan officer, so I'm willing to access your link to fill out this application and put some very sensitive information in there. What I make, how much I have in assets, what my social security number is. And then if there's not a lot of coaching or an explanation as to the process and the players, then I think that distrust immediately arises. Why am I getting this link to this other person? Do I really have to connect my bank account to your, point of sale system to get this done? And so I think just from an education standpoint, that's really important. And I think the more we can adopt technology that can be sort of a single solution, as hard as that is, because there are so many technologies to try to comply with the guidelines and make it easy for a consumer. But I really do think there's just a fatigue on the part of the consumers to getting a mortgage.
Well, and let's not dig into this too much, but trigger leads and all the things that are going on in that space that are just adding an extra barrier for us to have to overcome. So I get it. But one extra barrier that I hear oftentimes is more of a leadership barrier around kind of helping to, if you think about your teams and kind of, again, preparing them for the future of all these changes from a technology perspective that we're going to be seeing. One barrier is, well, we've always done it this way. It's not broken. Why do we have to go through all of this change? And so for the leaders that are out there, how do you help them to navigate this with their teams? Let's start with Michael on this one.
Yeah, I mean, there's a couple of ways to go about it. And it's something that being, at the credit union and really kind of changing a lot of what they have done historically to, how we feel like we need to operate in this environment and grow and hit our goals. I think having a clear roadmap for where you're going is helpful, because if you start changing things, for the sake of changing them, that never goes well. But without a very clear understanding of we're changing these things, here's where we're going, and here's how long we think it will take, I think that helps, because change brings uncertainty, but having a good roadmap and clear deliverables and expectations, I think, goes a long way. I also think, too, that the team embracing a philosophy of we can't ever get stagnant because of players such as Rocket, UWM, and some of these other large entities out there. They have a lot of capital at their fingertips to deploy, and they're going to continue to invest that capital to gain market share and protect what they have and grow it. And so I think anybody that gets complacent, I mean, the moment you get complacent, you're already falling behind because of the pace of change in this industry, whether it's from AI or from all the tools that are coming out there. And so there's an old phrase that came from the Intel CEO back in the 90s, and that was while they were getting some success and traction, but also kind of fighting for their life. He came out and said, only the paranoid survive. And I think that, while no leader wants to say that they're fearful or, they're operating from paranoia per se, I do think that sort of healthy fear of, hey, if we get complacent, like we very well may end up falling behind or even having to go out of business if you end up not being able to compete, I think is just something that leaders need to remind their teams of you cannot get comfortable. We have to constantly be embracing change or else we become irrelevant.
Yep, that's right. Dave, how about you?
Well, first of all, I'm going to pull from this book.
I love that book.
I would recommend everybody in mortgage, whether you're a loan officer or you're a leader, part of the whole high touch, high tech is growing your emotional IQ. But there's a chapter in here, it's chapter 14, and it's under the category of motivating other people to change. And chapter 14 is people only change when they feel like changing. And then the next chapter is unlocking the power of influence. And so there's two things in that chapter around unpacking the power of influence, and that is leading by example. And she talks, and Mel Robbins is just such an incredible storyteller, the way she weaves story into lessons. But she talks about how like just pushing people to do things, doesn't work very often. But when you lead by example, you're pulling people along. So my message would be to all the leaders to think of the behaviors that you want your loan officers to do. And one of those is to adopt technology. So specifically to the producing branch manager, who, to me, if you are a local lender, your change has to happen locally. Like the CEO gets to pick which tech is in the stack. The head of production recommends it, but then it's up to the producing branch manager. And the most powerful thing you can do is lead by example. And then a little exercise that I would push everybody to do that Mel walks people through is the 5 whys.
Yeah.
I first learned about the 5 whys. I don't even know. It was so far back in my career. It was I was reading a book on Six Sigma, just trying to.
Mhm.
It's what I came up with Mortgage Coach. And the 5 whys it's a tool in Six Sigma, but it's also a tool in change. And so when you roll out a new piece of technology, why? And then ask yourself
Yeah.
why 5 times. And then I would also push everybody right now to pick. It's not about the technology, it's about the best practice that is powered by
Yeah.
that technology and about the process that you're trying to install into your organization. And then do an exercise with your team on the 5 whys, and we could go on it, but to me, when it comes to high touch, high tech, it comes to future proofing. It's the local branches in the regions. Like I interviewed Daniel Saw recently, and he is in Columbus, Ohio, #1 market share leader, putting Rocket number 3 or 4, putting Huntington Bank, big bank, in number 2. And it really comes down to he's got a tribe of loan officers. I think he's up to 52 that
Wow.
they have high emotional IQ. They have systems, they have processes, they train, and they execute, and to me, that's how you future-proof with a high-touch, high-tech experience. I
love
heard
it.
you screw and awe about Mel. I take it you like her work.
I do. Yeah. I love that book. I almost tried to pull it up, but it's too far away for me to try to grab right now.
Yeah, I had a feeling that it would. By the way, this book is trending in the mortgage space. It was first referred to me by Jeremy Forcier, and then I referred it to Shant Benoshian, the #1 loan officer in America, and he said, I read that on my vacation last week. It hijacked my trip. I referred it to Shayla Gifford, who's a market leader in Reno, Nevada with Guild. And she's like, oh my God, Dave, I'm actually teaching that let them theory to my coaching clients right now. So anybody that's not in the know on the let them theory, it's a pretty good one.
It is a great one. I completely agree with you. Well, I know we are running up close on time, and I told everybody we had an hour, but I was going to try to get everybody out of here before that came up. So I'm going to go ahead and wrap things up for us. Michael and Dave, thank you so much for joining us today. And thank you guys that are here joining us online today too. We're so grateful that you were able to be a part of this discussion. Join us again next week. We're going to be tackling all things AI with Shashank Shaker of InstaMortgage and Mark Cunningham of Trained. We're going to talk about the risk, the reward, and then how to actually get an ROI on some of those AI solutions as well. So super excited to see you all back here next week. And again, Dave and Michael, thank you so much for joining us.
It's good to be here. Thanks, everybody. We appreciate you.
Bye, everybody.